Well, おはようございます。해주세요. Good morning or good afternoon from where you're watching. Or is it good evening? The start of a new week. We come in the new week. Yeah. Hope you have been well over the weekend. So if you're new here and you don't understand anything or you don't, please let me not be rude this morning. Well, okay, so before we continue, so today's trading nugget is learn to embrace uncertainty. The market will always have an element of unpredictability. Beautiful thing, yeah. On to our charts for the fundamentals. This week, yes, as we all know, FOMC coming in hot on Wednesday. Yeah, at 9 p.m. At that time, I would have switched the charts off, be doing other things. But this will tell me whether the market will consolidate during the day as we wait for the FOMC. But this is quite far, so the consolidation, yes, will be there, but it will be a big range consolidation. So I might secure around 15 to 10 pips. If this news were coming in at around 3, that is during the New York Open, then consolidation, of course, we'll expect consolidation and ranging and fake outs during London session. Yeah, this week on the Euro pair, we are seeing on Thursday, we're having red folders. I don't know how the DX trader, the trading platform that I'm trading with, is going to behave, but we hope we secure something. But also red folders, I don't trade red folders. Enough of that. So today we don't have anything that is happening apart from these yellow folders on Euro pair. The final core CPI year to year. Yes, it will be interesting. See how the Euro pair will move. Be such an interesting thing. This will effectively move the markets. Though it is a yellow folder, it will move the market since it's a CPI. Switching over to the charts, I started off the morning by marking off the buy side and the sell side liquidity of the previous week, and we saw the previous week closed as a bearish candle. We never got a chance to establish a 3-count rule from this, so unless this candle to be an okay, yeah, we are on our waiting patience. We were trading last week above the previous month buy side liquidity. By now it's as if we have taken out the buy side liquidity of the previous month. Now the market seems to be trading below the buy side liquidity of the previous month. That is interesting there. Yeah, switching off to our daily. Our daily, we see that yeah, the candle almost closes a doji, but it is showing something, but it is interesting. Marking off the buy side and the sell side of the previous week, we are seeing the market is targeting the buy side of the previous day, I mean, correction there. The sell side of the previous day, the market is trying to target us at the point at which it is at. When we pull our Fibonacci tool, we see we are trading off the golden zone. Yeah, interesting. So on to our 4 hour. 4 hour is not communicating anything. We're seeing we're initiating some sort of a consolidation over here. This consolidation, man. Yeah, with this consolidation, we are hoping for the market to either do something like that. Yeah, they've just drawn a lot of moves. But for the buyers, for the sales, I'm expecting something like this. That's this for the sales. The sales, the breakout of this consolidation. Breakout of the consolidation. Yeah, that's for me for the sales. Let me call something like that. Something like that. If this market come to this position, it may bounce off. So yeah. So we are seeing this consolidation here. That was great. Yeah, switching off to the 1 hour, we get to see clearly the consolidation now. We see there, it's nothing, there's nothing that's happening. We get to see clearly the consolidation. The consolidation can clearly be seen. Now this market is in a ranging position. Yeah, we keep that in the back of our minds. On the 30 minutes, we see the consolidation where it started. We see the consolidation started on Friday during the New York session, and is continuing on during the Asian session today on Monday. Yes, we see this supply, there's this supply over here where it indicates that there are a lot of sellers in the market, and there was a demand zone that was created over here, but it never held. It was not sufficient enough to hold the price up, since it is the size of the sellers and the buyers is quite small. And we saw during the Asian session today in the morning, it was broken. This level was mitigated. So price on the 30 minutes, you need the price to come here, maybe to grab find some buyers to continue pushing high. That's my bias, as it coincides the taking out of the sell side liquidity in the Asian sell side liquidity. Yeah, that is interesting there. So switching off to the 15 minutes, we can clearly now see the consolidation at its best. We see the market is trading at this, between these levels and between these levels. So for you to take a buy, you need the break of either these levels to the upside or to the downside. Yes. Yeah, that is interesting. On the 5 minutes, in the 5 minutes now we get to see what the market is doing. And with the 5 minutes, we, based on the recount rule, here is where the recount rule plays a major role. It does play a major role in assisting you in tackling the consolidation. So now onto our buyers. Before I continue, this was the Friday's trade. The retest of this level over here. Surplus, also these levels. Take profit at these levels. But when I was managing the trade, what happened was I had opened to position at this level over here. When I was managing the risk or managing the trade, I wanted to close only one position, but DX trade is one of the most ridiculous trading platform that was ever invented. When I tried to close, it closed both of the position, and I was like, good. So today, what am I seeing? According to me, first of all, what I'm seeing is the New York high over here, which acts as a resistance when we are trading below it, and acts as a support when we're trading above it. Also, we are seeing the New York low, which trades as a support when we are trading above it. As we saw that during the Asian session, the market tended to sell off from this supply over here, and it got support from this demand zone that was formed during the London session on Friday, and also the New York low. Yes, we can see that clearly, and yeah, we can extend this for a bit at that level. I don't want it to conceal the markets. I don't want to have a lot of clutter in the markets. Also, looking at the lunch hour, we are seeing also the consolidation from the lunch hour. The market on Friday during the New York lunch hour tended to go up and now pushed down. Switching this to the London session, since that is the market that we're trading right now. Right now is at 6:28 London time, and yeah, we are seeing the reaction of this supply the market. Yeah, so for my buyers today, the textbook buyers is taking out of the sell side liquidity. We get a support from that level. Boom, boom. That is the textbook buy of the sell side liquidity. For the textbook sell of the based upon the buy side liquidity, we sell at the premium, we buy at the discount. That's the 2022 ST mentorship. Yes. When we pull our Fibonacci, this is the high of the Asian session, and this is the low of this Asian session. And yeah, I've not arranged this perfectly, but we can see the 50% of the 0.5, the half level. You can see right now we are trading at the discount, at the premium, yeah. We wait for the market form, since the Frankfurt Open has not been established yet. This price may continue pushing up, and we adjust our buy side liquidity accordingly. It may continue pushing down, and we adjust our sell side liquidity accordingly. So what am I saying? What I'm seeing is we are having this supply and we're having this resistance at this level. For me now, away from the textbook, what do I expect to do? I'm expecting to sell at these levels. When the market come to these levels, we are seeing there's this supply over here. It is a major supply since it has not been initiated before, and with that supply, we get to see that the likelihood of the market coming in and tapping a reaction from these levels is quite high to push the market down. That's my sales there. So for my buys, I agree with the textbook buys. When the market comes to these levels over here, and taking out the sell side liquidity, I'm willing to wait for a retest up on these levels over here and shoot to the moon. So another thing for the buys, for doing pre-land, and this is the 5 pips or 6 pips that I can secure. During maybe the Frankfurt Open, the market may come, push, break this OB over here with the creation of the 3 count rule and break of this. The market may see a retest and a pullback, a pullback and a retest of these levels over here, I am willing to enter a low risk to secure around 7 pips of that move. That for me I'm going to do, but I will wait for the break of the New York high and the break of this supply over here, where sellers seems to be holding their position. But at this range, yeah, all I will do based upon the 3-count rule, and all in all I'll be waiting for the next step / bias print in all time frames. But what does the 3-count rule? That's the strategy. Wait for confirmation. When I see a 5-minute clean traffic, look at the bias print. 5-minute check traffic will facilitate whether to scale to lower time frame, which is a 1 minute. 5-minute wait for confirmation, possible entry, biased print, 3-count rule. Higher time frame and the lower time frame synchronization on the charts with the OB levels and 3-count rule. And last but not the least, always be present on the charts. As I leave you, I want to tell you, don't break your own rules. For goodness sake, it is your own rules. If you break your own rules, what does that say about yourself? Think about it for a minute. Also, last but not the least, remember, traders are professional losers. You need to know how to manage risk when you enter any position in this market. The entry does not matter. It never matters, the entry, but the way you manage the risk. Yeah. With that, thank you. Blessed day ahead.